Good morning, everybody. It's Tuesday, September 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3 1/4 at 416 3/4. November soybeans were up 13 3/4 at 1053, and December Chicago wheat was up 4 1/2 at 587. Yesterday afternoon, after the close, we got crop progress and conditions. Corn held steady at 65% in the good to excellent category. That's versus 56% for the average. 14% harvested across the nation versus 9% last week and 11% for the average. Soybeans also stayed steady in the good to excellent category at 64%, 13% harvested there versus 6% last week and 8% overall for the average. Winter wheat, 25% planted. That was versus 14% last week and pretty much right on average, 24% for the average. Good morning, guys. A lot going on. We've got, more and more chatter of long-term, potentially continued dry pattern for Brazil. China announcing that they're looking to stimulate their economy. Certainly, I think all contributed to yesterday's pretty solid pop in the bean complex. Dustin, I guess maybe start us off with a few thoughts here this morning, and then we'll throw it around the room.
Yeah, a lot of positive things all at once here for beans and corn. Ongoing dryness in Brazil. Also, one thing Trump said yesterday was, his first call is going to be to China for them to honor that original phase 1 trade deal, which I think is another thing just in the back of people's minds. If Trump is polling higher going into elections, that is something that is a top priority for him. And, when funds are as short as they are, that's a very disruptive thing if they try to get out, if they see that as an existential risk. So in addition to that chance that maybe Brazil is seeing a drier trend going into their season, we've seen some sales come through the books. And we've got some huge stimulus coming out of China. They've kind of thrown the kitchen sink trying to prop up their economy. All of those things are definitely kind of a narrative flip. So, from what appeared to be, it still appears to be a very large U.S. balance sheet. If we can get this record yield that's been written down in the last couple of WASDE reports, there's a lot of room on that balance sheet for demand to actually be knocked off a bit. And that 500 million bushel carryout number, still seems like a very probable thing. So there's been a really great story for people to be short beans, and that's why the funds were record short this year and held so many shorts, up until recently. They're probably getting out, and that might be some disruption to the market right now. We don't know for sure. We'll see that confirmation in the next couple of COT reports. But yeah, I'd be interested to see, the 100-day moving average up there in the 1085 range is something to watch out for in the November contract. Not saying it's going to go there, but definitely an eye on that level from a lot of people.
That's good stuff. Ben, what's on your mind this morning?
Yeah, I think that we've got, some supportive things when we look at markets. Everything except for the fact that we have a really large crop that's coming in. We talked about this before the opening with low river levels, really poor basis. A guy that was a mentor to me said something I think that rings true today. He said, be careful when markets are doing the opposite of what you think they should be doing. We may be in one of those phases. I think that when you take the technicals the way we have here in corn and soybeans, you draw back in some longer term traders that are probably in a mode to cover. They've been short. We crossed the 50-day on June 14th, and that began a pretty harsh decline. So these people trade over longer time frames, and some of the things that are their ticks right now to exit or enter positions are kind of being triggered. And I think that's great. But my concern is that we're 13% harvested in beans and 10% in corn. We've got a long way to go here to find a home for a lot of crops. But this may be also, partially due to concerns in South America. And we've talked about this before, of that being us being the residual supplier, that it's a wake up when things change down there. So I'm cautiously optimistic, but I think we're sort of at a crossroads here to see if we can go touch the 100-day moving average in both corn and soybeans.
Justin, you were talking about it before the show. Just, you start crossing some of these lines, and nobody ever wants to be early, but at the same time, you've got to respect the pop and the underlying geopolitical things we're dealing with, and the potential port strike up north. So there's just a lot of things going on that kind of can make you nervous.
Yeah, there is. And think about what the talk was 2-3 weeks ago. Despair. Old crop corn's getting forced to be, being forced to be sold in a lot of areas. Talking about multi-year ag problems, all those things, and those are real concerns. But here we've had some really nice rallies, and yields are still really good. So if you're in that camp where you have really good yields, it's a godsend, really. I mean, you're sitting there, you got July beans over $11. I mean, we've got some spots where people can make some money, which is a huge sigh of relief, in my opinion, for a lot of growers out there. So try to balance all these things, and, really just stick to all these things. Change so fast, right? So if you're all of a sudden you're harvesting, you're getting good yields, you really got to just kind of run your business and say, here's this pop, I'm making money, whatever it is, and just sell what you need to sell, take advantage of it. Yeah, of course it could go higher. The nice thing is that options are still really cheap, relative to, flat price, I think. And Ben can talk more about that, but I think they're still really cheap. I think a lot of it's because we've seen a lot of people selling accumulators, anything to get a premium. I think a lot of accumulators, especially out forward, look horrible. I think the risk reward is not very good. And I think people are trying to get any kind of premium they can to try to turn a profit. So the flip side of that is if you have big yields, flat price is pretty good, especially with the carry. You can, if you're willing to do the work, you can make some money and, buy some options, do some certain things to, catch upside if, South America stays dry, if Trump wins, if, all these things happen, you could write a pretty bullish scenario where, China has to come in and buy a bunch of things, and they're trying to stimulate their economy, and, South America stays dry. Like you could turn into a bull market for sure. The flip side, to Dan's point, is river levels are super low. We haven't sold anything yet, really. Interest rates are still high. Farmers are still going to have a big crop, and we're going to harvest a lot of it in the next, month. So there's a lot of ways that you could write down a bullish or bearish scenario here, I guess is my opinion. And so if you look at, yourself as a farmer and you're harvesting a big crop, you got to really figure out how to protect it, because you could also go make new contract lows here in 30 days. To Ben's point, it turns so quick. It's not making sense right now. It could go the other way as well. So just try to keep all that stuff in mind.
Well, I've always thought that one of the benefits of the October report, we're coming off some pretty big yield prints on the September report, and the market obviously, part of it was maybe we didn't believe that with the dry finish. The October report, you can cover yourself up really cheap in beans normally, because it's a week or two before it goes off if you're worried about report risk. And you have December options, we're a month out from those going off. So that risk point is huge. And there is no guarantee that they won't raise corn yield on the next report, right? So I think that looking at the timing of it, the biggest, most heavily traded contracts we trade, we get this data dump literally a week before beans go off and a month before corn goes off. So having a little bit of flexibility there, if you get this rally continues heading into that number, might be a worth looking at.
Well, I thought, go ahead, Justin.
No, go ahead.
Yeah, I was going to say, I thought Dustin made a really good point in last evening's commentary, just about understanding your crop insurance too. As we've rallied significantly, you had a bunch of guys that probably have gone from deep into a payment to potentially either yielding outside of a payment, or, there's that conundrum too that I think guys need to be careful of.
Yeah, I mean, 100%. Like it's all about your numbers right now. and all these, we can sit here and talk every day about technicals, and I mean, stuff's changing every day. Like you said, there's so many moving parts right now. And would it surprise me if all of a sudden next week beans are below $10? No. Or 11 or above 11. I guess I wouldn't be surprised either way. So that's a huge difference to a farmer versus us sitting here talking about technical areas and all the things that we see. You really have to just know your numbers, and crop insurance, obviously, such a huge part of that now. And that's the month of October. So I've seen a lot of years where we rally through the middle of October, kind of take away all the insurance protection and then start a massive break again. So, I've seen both scenarios.
I would add to that too, right? I think we're starting to trade smaller yields. So we talk about, are we going to keep rallying? Are we going to break back to the lows? I think a lot of that's going to depend on the next couple of reports, right? To your point, just around this rally. I was talking to a customer. He's like, is this a gift, or is this the start of a bigger move? And I said, it's definitely a gift because you're already into your corn crop and you're looking at really good yields, right? So it's definitely a gift. But yeah, can it keep going? Yes, right. And I kind of, my bias is that it will, but going back to, it is a gift for you if you know where your yields are. You're looking at a nice rally into record corn yields. I mean, you got to be doing something about that,
Yeah, to that point, I think that's the biggest mistake I've seen over the years is, I have a big yield, but, I heard Indiana's bad, or like worrying about somebody else and like what that's going to mean to the markets. It's like, at the end of the day, this is the price of corn or beans, and here's your yield. And if you have really big yields, figure out how much you want to, risk, and you can buy calls or you can do any kind of thing you want to gamble that money on the upside. But at the end of the day, it's your production. It's where your crop insurance sits. It's all those things that you really have to look at as a business person, in my opinion.
No, that's all good stuff. Any parting shots on the grain side, guys? Good.
The real was up quite a bit overnight. I think that's part of some of the bean moves overnight. You got the real was up 1.2%. Beans are up 1.3%. Follow through from yesterday, so that was good to see.
Yeah, and dollar index. What do we get this morning?
We're down a little bit.
Down a little bit.
Just a little over 100.
Okay, so still maintaining that kind of 100 level there, and new all-time highs in the stock market.
Yeah,
so.
let's go.
Yeah, so the dollar index is right on the 200-day moving, right on the 200-day moving average. So we haven't been below that really since last November, or November of 21, actually. So
wow,
like kind of 3 years since we've been below that. So that'll be.
So you had a crossroads
important.
there too.
Yeah, that'll be important. So a lot of moving averages we're hitting on every commodity.
Well, very good. Rylan, quickly here before we come into the open, solid start to the week in livestock after kind of a non-do-nothing report, Friday. But Hogs continue to truck higher, though, posting a fresh high there yesterday.
Right. Yeah, absolutely. I mean, it just kind of seems like, it kind of felt like something was going on yesterday that just, with the cattle on feed report coming in, just more of the neutral, just generally neutral. I mean, it was talk about spot on with what the market was looking for, but we really haven't seen any cash trade yet. The beef market's still a little bit mixed here, and the kill is expected to be a little bit smaller here on the cattle side. So just overall, I think there's a little bit of caution, but overall, I mean, yeah, it was definitely a good start, and does kind of feel like, if there is a little bit more of a focus on this Chinese stimulus coming into the day, it seems like you got everybody, all the managed money and the specs really prepared for that. The hog side of things, we're knocking on the door of the contract highs, or at least the annual highs. So, I mean, like, we're coming into a time frame where prices look good. The news is really good. They're just, even with the setbacks that we've seen in some of the cash markets here, they're still holding up really well. So I think just from a demand standpoint, I think people are expecting just a little bit more, or at least some stability for right now. So we'll see how that all pans out. We'll see if this week, we see a little bit more optimism on the cash side. If the Packers still want to pay up, we know their margins are a little bit threatened here, but we'll see what they're willing to do. So I think there's a little bit of a question mark kind of coming into today. And as far as hogs go, I mean, I wouldn't be surprised to see a little bit of hedging here, but if the market expects China to just swoop in here and start buying, I mean, U.S. is probably one of the cheapest tickets in town for pork. So I imagine that we'll probably see some follow through here today, just on that news alone.
Very good. Appreciate the update. Just coming into the open here, we get December corn up 4.5 at 418. November soybeans are up 13 3/4, up 14 now at 1053. And December Chicago wheat up 4 3/4 at 587 1/4 is the last. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Certainly helps us out, and we'll keep you up to speed on all things AgYield. So it doesn't cost you anything to do so. Click like or subscribe, and we certainly appreciate that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day. Be safe out there harvesting, and we'll be sure to talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.